Welcome everybody to Wall Street Reporter's next Super Stock live stream, January 27th. We are back with Organic Garage, OGGFF, over the counter, OG on the TSX Venture Exchange for those in Canada. I think probably one of the most exciting, risk reward setup type opportunities out there. Company with a 20 million market cap that, it has a path to, 200, 500 million market cap, increase in valuation very soon. So for anybody that's brand new to our program, our goal is to bring you those stocks which have that 10x to 100x upside potential. Companies going after massive multi-billion-dollar market opportunities. They are at a key inflection point, and there are multiple catalysts in place to ignite that increase in shareholder value very, very soon, like in the coming weeks and months. And I think we've definitely been seeing that from Organic Garage. The company's definitely at that inflection point. We know about the market, the size of the market opportunity, but we're starting to see things accelerate. So Matt, good to have you back.
Thanks, Jack. It's great to be here.
Matt, one of the reasons I asked you to come on was like some of our earlier CEOs. I said, hey, the market's really very volatile right now. It's good to just come back and let new people or existing people know that, hey, we're here. The stock is not the business, and the business, the two separate things. And at some point, the value comes back, and it's good. It's always good because look, as I've said before, you know when you have a quality company, a quality CEO is when they show up during good times and bad times, not just when the sector is hot or when the market is running, everything like that. So I know that everybody here appreciates it. Matt, I'm starting to hear more happening in the plant-based space. Like it's really going. I think we've seen in the last few years that things are really starting to go mainstream. But I actually just saw a video. This is on YouTube, right? On YouTube with this guy, a VC named Gary Tan, Garry. I think the guy is he's a young guy. I think he's like, I don't know, he's probably 20 years. I don't know. The guy's made billions of dollars. I think he was one of the original investors in Coinbase, a couple of he's had some massive wins, but they're all been tech companies. And he's actually now investing in the plant-based dairy space, plant-based dairy. I think put some money into a company that's doing some sort of, I don't know, sounds like some sort of science thing, with I don't know, cells or whatever.
Yeah, there's some like biotech companies that are focused on flavor enhancing of certain plant-based items to make them mimic more closely their non-plant-based equivalents. So there is a science tech to that.
It's kind of a tech thing, but the thing that and again, that appeals to some, may not appeal to everybody. Some people just like something that's a little more organic and natural, not like a science experiment. So, but whatever. But the point of it is this: is that when you see like major investors start to go into the space, especially and one of the things I saw in the video was the guy was very specific. He said, look, the dairy alternative space, plant-based dairy alternative space is, like we talked about before, it's a $900 billion market opportunity.
Oh, yeah.
So this is,
well, I said it before, it's not a fad. It's a fundamental trend that's changing, in the marketplace, what consumers are preferring to eat and what products they're ingesting. So this isn't something that's going away. It's only increasing in popularity. So it is. You're right. It is a very exciting time in the industry.
Yeah, and no, it's interesting. I kind of didn't even realize this, but so Gary Tan, he's Chinese, and he said that Asians have a hard time eating dairy products. So he was very looking forward to this plant-based alternative because and that's how many? That's 1.5 billion people we're talking about. 1.5 billion people opportunity right there. But not just Asian, but a lot of people are lactose intolerant. They might have 2 billion people potentially.
Or more. I mean, once again, it's only a growing category. It's one of, if not the fastest growing category in the food sector. So it is on fire right now.
Yeah. No, it's very exciting. So let's talk about this. So right now, Organic Garage, the stock is trading at a valuation of like $20 million. It's $20 million for the whole company. It's basically what the market is valuing this at 32 cents, where it's at today. And it's important to emphasize the company's doing, $25-30 million in revenues historically. That's just the legacy business with the retail organic garage stores. But there's two catalysts right in front of us in the next few weeks, months, which could really ignite this thing and make this a 10 bagger, I believe, in my opinion. One of them is we have an immediate path in front of us to really double revenues with the stores, because I think in an earlier live stream, I think a few weeks ago, you said that you're looking at, because you announced it maybe a month early, but you're going to be opening 4 to 6 new stores this year in 22.
Yeah, we're focused on taking good sized jump potentially with our organic garage retail business. And our real estate team is working very hard. I mentioned last time, we had to reschedule our interview because I was out doing site tours. So we do definitely see an opportunity to take a serious jump on our retail business, to get to that 8 to 10 store range. And you're right, it's doubling, if not more than doubling our retail business.
So that would basically, and I think again, what's going to happen is because the market is forward looking, as soon as you announce this, and I think you said you're going to announce 4 at once, because it's just from just a operational standpoint, or however, it's just as easy almost to, roll out 4 stores, at once as it is to do 1 at a time. Or
with the model that we have now, we touched on this when we did, that great video walkthrough and things. We feel very confident in our model now. What goes in, we have, like you used to say, we got the binders, we got the checklist, we got everything that makes it easy to roll out stores. It's systemized. So from a construction standpoint, you're right. Whether it's opening 1, 3, 6, the teams are in place to be able to execute that.
Okay, and I think it's important again to emphasize that again when your background originally before Organic Garage was in the franchise industry, and so you understand how important it is to have kind of those systems in place when building out these stores, because that saves you a lot of aggravation and time, because you're not starting from scratch. You already have a template.
Yeah, you don't want to reinvent the wheel. So that's we touched on that. We spend a lot of time analyzing how we want the stores to look, execute, what goes into them. And so from a systemized standpoint, we're there, which is why we're taking a look at taking this, jump to go from, our existing store count to the 8 to 10 store range.
So there's 2 paths, actually 3 paths for this thing to be like a, $2.50 to $5 stock, a 10 to 20 bagger. Path number 1 is let's say you just roll out 4 to 6 new stores, and we'll get into the CPG side, which is really the most exciting thing. But if you roll out the 4 to 6 new stores, that's going to bring up revenues to a $60 million plus run rate, right? And I think the market would, once the market sees that you have revenue growth starting to accelerate, they see scale start to happen, all of a sudden you can get a 3, 4, 5 times multiple based on revenues. So you could have potentially a 5 times multiple, forward looking, 300 million valuation, which would be, I don't know, what's $6 a share right there. Path number 2 is the CPG side, which I think most investors, apparently that's what they really want to hear about, which is the future of cheese, future of butter. That's your CPG line, targeting the dairy alternative business, the $900 billion opportunity. Can you, again, we talked about before, I think you rolled out the model. Now, how many SKUs right now? You have 4 SKUs, right?
Yeah, I think it's just important to even just rewind a little bit. I mean, we made the acquisition, last March, to take advantage of the opportunity that was happening in the market. And, it speaks to, number one, we keep a pulse on the food industry with what's going on and what's popular. And then also what's popular in the public markets. And we saw this as a great opportunity to provide enhanced shareholder benefit in a rapidly growing sector that we knew and do know very well. And so we acquired the company. We worked on tweaking a few things and got our products ready to launch. And we launched our first products in late October, early November. And it was great. We launched 4 new SKUs in basically like 6 or 8 weeks. It was tremendous. In our local market here to gauge consumer response, see what the interest level was, tweak things as needed before a larger scale rollout. And the response was phenomenal, not only in our home market, but I can tell you across Canada, obviously because we launched here in Canada, but Huge response from US clientele who were asking where can they find the product. They heard about it. We got written up in Veg News as one of the hottest new products, the most realistic tasting plant-based brie in the market. We made their holiday list for Christmas time. Just tons of social media responses and email inquiries on where to find the product. So we outlined to, in previous videos what we saw for the path for the company this coming year on the future of cheese side, which was 4 main catalysts, which was one, link up with co-packers, specifically in the US, and we'll touch on that in a second of why we're heavily focused on the US market, but link up with co-packers who can produce the items in mass quantities. Our model does not call for a capital intensive rollout approach with us, building a manufacturing facility and having staff. No, we want to leverage the co-packing structure that is out there to grow the business. So that's number one. Number two was to perfect the last 4 to 6 SKUs that we have in the pipeline to get to 10 SKUs. Doesn't mean that we'll end there. It just means that we've been heavily focused on getting to the 8 to 10 SKU mark.
But the key is, I think you've said before, is the key is to get to the 8 to 10 SKUs, because that's the number that a distributor or that's kind of the number that a store they want.
Well, it gives a great variety of SKUs. I mean,
Yeah,
different retailers will have different, obviously, focuses and certain sections that they have available to put products. So if you're only going to them with one and they say no to one, well, what else do you present? So 8 to 10 gives a great compelling offer for the brand. So we felt that was very important. So we're going to work on perfecting those with the co-packer, once we have that signed on. Number 3 catalyst is to link up with, 1, maybe 2 distributors to help deliver the products direct to the retailer, network. And number 4 was to reach, I mentioned 500 doors, but we're feeling very confident that we should be even able to have a runway to growth to 1,000 doors.
In the first year?
In the first year, going back to the point, which is, and I think it's important that people understand, is we are very heavily invested and interested in growing the brand in the US market. It's dominating a lot of our internal discussions and our future of cheese team. And I think from an investor standpoint, they should be very excited about that, because given the size and scale of the US market. But I can't tell you the level of interest from consumers in the US market has overwhelmed our team and has made us, take a very hard look and say, look, let's give a real hard focus on the US market. And that's why we feel even hitting up to 1,000 doors is definitely achievable. And so when you look at those 4 key catalysts, when it comes to not only growing the brand, and so I'll just give you the quick math here that I've touched on in previous calls, which is 10 SKUs with an average turn rate of 1 case per SKU per door. So, and this is going back to 500 door math, not even 1,000 door math. So we'll focus on 500 door math.
Yeah.
But 500 doors, 1 case per SKU per week per door, with an average unit cost of $5 to the distributor. Some of our SKUs cost less, some of our SKUs cost more. So we're using a good average. And once again, some retailers will sell more than 1 case. Some retailers will sell less than 1 case, which is why I say 1 case per SKU per door as an average with a $5 unit cost, pack 6 is a $7.8 million a year company. That is the math. Multiply that by
this is not okay. So once
multiply that by 2 if you're hitting 1,000 doors. So that's why we feel very confident, in following this path, linking up with the co-packer, perfecting our SKUs, linking up with quality distributors, and then scaling to 1,000 doors. That is the runway. That is the math, and that's why we're heavily focused and taking a very hard look. A lot of our team is focused on conversations in the US market, and why we're super excited for what this year is going to mean, for the future of cheese. And then touching on that, just the opportunity that exists in the plant-based organic food CPG market. Since we've acquired Future of Cheese, companies have reached out to us inquiring, what our plans are for the future. And we do see a path towards, looking at select acquisitions in the future in the CPG space, just given the popularity and, our expertise in that. We know the food business, the plant-based
right. I mean,
business.
you operate, very successful organic retail stores. So, it's a natural fit that you could, will be a good product, in terms of acquisition. So,
well, we're on the cutting edge of understanding what the consumer is wanting. We get to see products before they even hit the market. And once again, I've said on this program before, we're at the epicenter of the plant-based movement. Plant-based companies come to companies like Organic Garage to launch products well before they launch in mass retail. And so we're able to see things, before they're even, so-called popular. So, it gives us a tremendous amount of market insight, and gives us a tremendous amount of, kind of a head start on what companies could be up and comers and what might be worthwhile acquisitions to grow, our CPG side of our business. So
Okay.
I think there's a lot of exciting stuff going on.
Okay, so when you have so what we could expect, I think what investors could expect this year, right? I don't want to put words in your mouth, but let's say the next 12 months, right?
Yeah.
Is that the future of cheese, the CPG line, the dairy alternative, plant-based dairy alternatives, that's going to roll out. I mean, the goal is to get it at least into 1,000 stores in the U.S., mostly U.S., Canada. So you call it doors, so 1,000 plus stores. And that'll generate roughly 15 million based on the numbers you said.
The run rate to that, yes. Depending on listing deadlines, I mean, look, certain retailers have specific criteria, but our goal is during this next 12 months is to sign up and have the runway to growth through 1,000 doors at retail. And so
that's just for starters. Because
that's just for starters.
We've talked before that Oatly is in 90,000 doors. So when you're saying 1,000, it's not like you're getting the whole market. You're not even scratching the surface. So in theory, you get to 1,000 doors, right? Year number 2, you might be in 3,000 doors and doing 45, 50 million. You have more SKUs, and the people on your team, like you had Yossi, who's with Danone. He's done that. He's built. He's scaled businesses. The consumer. In the yogurt space, all these weird dairy whatever products, he's scaled massive businesses like that. So
the team's in place. You have the 2 co-founders, Afram Bersi and Craig Harding, on a curation and marketing and PR side. You got people like Yossi Herber on our advisory board, who brings the corporate CPG background on the marketing side and knowing how to promote and market the brand. And so for us, the building blocks are in place. We want to be able to leverage a co-packer to help scale the brand. We don't want this to be, a capital-intensive business where we're having to invest in facilities and things like that. It was never designed for that. We want our team focused on product development, R&D, and we want them focused on marketing and promotion. For anybody who's looked into Afram and Craig's backgrounds, they've been on the Food Network. Afram just had a very successful TV show air on the Food Network, where he traveled the world visiting cheese producers. Craig has been on the chef programs on the Food Network.
They have a lot of street cred in the gourmet.
They have a ton. And getting them in front of media to promote the brand, which they've already done to some respect, which is why we've gotten write-ups on things like Veg News and things like that, a U.S. publication. But let them focus and be the face of the brand and promoting it and pushing it to the consumer. And let's leverage the co-packer on what they do best, which is manufacturing. And so we feel this is the path towards success for the brand. We feel the 4 milestones that we've outlined for this calendar year are very reasonable for us to hit, given the the inroads that we've already been working towards on the co-packer front. Our team has been very busy on that front, so we're very excited. So we feel the 4 milestones are achievable, and we're working very hard to hit them.
Okay, so and let's say you do 50 million in the first year, right? 1,000 stores. The market values, even like the Nasdaq, a lot of stocks are down 50%, but still, the market was willing to pay a multiple of 10 times revenues for companies in this sector, in the dairy alternative sector, especially when you have this type of growth. So if you can get to 50 million in year 1, year 2, the market is forward looking. If they see you doing 50 million run rate year 1, they're going to assume you could be doing, 25 million year 2. So that's 250 million valuation right there, just right there. And that's $5 a share. So Matt, actually, potentially this could be a $10 stock, because you really have in here, and by the way, I'm being 100% serious. I know but it's the reality.
I let you quote the numbers, Jack. You know the numbers. Look,
but it's the reality, right? So because you have these 2 businesses, they're kind of like, they're by themselves. Each one of them in the next year could be worth, 250 million plus. So potentially 500 million valuation,
Look,
250 for the or more.
I've said it, and as a company, we believe it. Both companies have a tremendous amount of runway for growth. We feel it's a unique period in time where we have on both sides of the business the right brand, the right team, the right product mix at the right time. So for us, it's about capitalizing on that opportunity on both sides of our business, the retail side and definitely the CPG side. And look, the CPG side, the multiples, yes, on valuations are much higher than at retail, which is why, once again, we're always looking for opportunities to enhance shareholder value, and why we took this opportunity when it came to us on the CPG side. And so, we're super excited. We feel the U.S. market has a tremendous amount of growth potential to really scale the business up rapidly, and our team is very focused on that. And those 4 key catalysts. You know as well as I do. I mean, the market will interpret it as they want, but it points to a tremendous amount of growth opportunity, and hopefully that leads to share price appreciation. But it's just a unique opportunity in time that we're super excited. We have the right people, the right product, the right brands at the right time to capitalize on it. So we're focused on growth.
I think what could be maybe what the market is really looking for, I think what's going to be the catalyst to unleash this kind of value that's kind of trapped in the stock almost, is when you announce the U.S. market, when you announce entry into the U.S. market. Because I think that some investors might be thinking, because we're actually getting like a decent following in the U.S. now in terms of the stock, but I think that once they see that you're actually going to this market, they're going to see, okay, now these guys can really start scaling this, because maybe they think, okay, Canada's kind of a small market, but but the numbers you throw out, the 15 million, that's just the Canada market, the 4 stores, 6, that's only in local. So there's a really massive upside. But I think again, the market is probably looking for an announcement of entry into the US, maybe with a copacker or something, or a distribution deal.
Yeah, I feel very strongly the copacker will be a large catalyst, because the copacker will outline to the market where our focus is going to be and what capacity is, because everything kind of snowballs very quickly after that. So that's why I outlined those 4 key catalysts: copacker, rounding up the SKU development, distributor, and 1,000 doors. And those are 4 very achievable milestones for the next 12 months. And you're right. I appreciate it. Every investor has the right to have a wait and see approach, and that's their choice as an investor. All I can say is we're super excited. I'm super excited. It's why I love getting on calls like this, Jack, with yourself, and answering questions or telling people what we're up to, because I see what's going on behind the scenes, and I kind of know what's coming down the pipe, and I feel super excited about the direction we're taking. I think the focus on the U.S. market, given the inbound interest that we've seen, tells us that there's a huge opportunity there, and I think the stock should respond accordingly once we have some announcements that are in the pipeline coming up. So it's very exciting.
Let's get into some audience questions, but
Yeah,
I'd like to just emphasize, it's an incredible opportunity here, where the stock being 20 million valuation, essentially it's like a private market value. I mean, there's private companies that get bought out for more than that when you have the types of numbers you're doing. I mean, you're doing what, 25, 30 million revenues, so yeah, it's crazy. And then you have a path right here. You have where this can be a 500 million market cap, and this is not without any kind of like, and it's not difficult. I mean, it's the bar is very low. You just double, just 4 more stores.
Well, we just remind people we're a real company. We're not a paper company. We're not a startup. We're not having to raise capital to fund operations and things like that.
Matt, the problem is you're too real. You're too real. In Canada,
probably,
the investments on the
people
TSX,
they're real companies.
No, they're used to these. They're used to like development stage, or something is it's coming whenever. But when they see real revenues, like I've actually noticed that when actually they see real revenues, they kind of get like they don't know what to make of it all.
Yeah.
What's going on here? This should not be happening. But you actually have, and I think what's going to happen is, like, I think over the next year, as we build the U.S. market following, and by the way, like, look, you're here with Wall Street Report. I mean, our whole focus is U.S. market. Like, I mean, look, sure, we have a following in Canada, but I think as we get in the U.S. and when you get the product in the U.S. investors do pay. They're willing to pay for the opportunity, which is like, it's the upside is, again, 500 million. That's a 25 to 1 upside to where the stock is right now. Wait, is that right? Wait, 20. Wait, yeah, $10. Basically, the stock could be $10. 50 million shares out, 500 million. The math is very easy. It's not like we have to do any kind of complicated stuff. So, okay, let's get into audience questions. When can we expect new SKUs for Future of Cheese?
Yeah, the team's been working hard, so we have a good repertoire kind of in the pipeline. I think just going back to the milestones that I outlined, our key focus right now, I said that I think in our December call, was to sign up at least one copacker, excuse me, during the first quarter of this year, and we're working hard towards that goal because I think our next round of SKUs are going to be perfected along with the copacker. Sometimes there's tweaks that have to be made to make it scalable and be able to be mass produced. And I think for us, our initial focus is we're maintaining our 4 existing SKUs and sales continue to grow with those in our local market. But our initial hard focus is signing up a copacker. The 4 to 6 SKUs, I would say, if I were to estimate, they're probably 75% done. So they're market ready, but we're not going to rush them to market because we feel that last perfection of them is really going to be done hand in hand with the copacker to make sure that when we do put them out to market, that they're able to be scalable with a copacker. So I think that is an important step.
Okay, interesting question from Erez. Hi, Matt. Deep and long investor here. Okay, this guy's got a lot of stock. I have a question for you. Why is getting a copacker sign up proving to be a difficult task if you're working on it full time?
Yeah, good question. It's not a matter of it's difficult or not difficult. It's finding the right copacker. Certain copackers have certain limitations. It's not a matter of just going to a copacker and it's they can produce anything that you present to them. And especially part of what makes Future of Cheese so great is it's unique. It's not like another SKU in the market. And so sometimes that takes us meeting with a copacker and discussing with them and having to alter production techniques and things like that that they're not used to. The other thing I think is important to note is we launched our products, I would say even the first week of November, and then we basically had 5 weeks to launch our SKUs before we hit the December slowdown. With everything going on in the economy and production and supply chains, it's not a great time to be approaching copackers. So I said on the program in late December that we were going to hit the ground running in January, and that's exactly what we've done. And so the team has been very busy, already in discussions with copackers about capabilities, production techniques, what our SKUs are, what SKUs are we have in development. So this isn't something you rush, because once you find the right copacker, scaling that is immaterial. You can grow very rapidly. We want to sign up with the right partners who can really grow with us and keep up with the growth that we expect for the brand. Okay,
Matt, this guy's got a lot of shares. He's got like 3-4 kids. They got to go to school. Like he needs the stock to go to $10. I mean, they got to eat. So okay. So Samantha is asking, congrats, Matt. Can you please speak to the balance sheet and current monthly burn versus the next 1 to 2 quarters? Interesting question.
Yeah, great. I mean, look, our balance sheet, in my opinion, is very strong. We did some stuff to, project out where we want to be over the next, 18, 24, 36 months and preparing the business for that. We have no large capital outlays. So from a cash balance standpoint, we're very strong. And from a burn rate, the great thing about Future of Cheese is it's a very small capital intensive business, given the fact that we're not investing in hard infrastructure like a manufacturing facility and things like that. That is not the business model that we have. And Organic Garage, for our short-term business objectives, have more than enough cash on hand. We've always said we would only be in a position of raising capital if we felt that there was an opportunity to take a serious jump in the business. And whether that's on the Future of Cheese side or a potential acquisition on the CPG side or a large ramp up in store growth on the Organic Garage side.
Matt, I think you have what? You have like 3 million in cash on hand?
We have north of 2 million in the bank. We are not burning capital for our operations. So we're in a great position, balance sheet wise and growth wise, to properly evaluate any opportunity that comes our way and not be having a gun against our head to make a decision. So yeah, it's a great position to be in.
Okay, so let's see here. Oh, interesting question. David's asking an interesting question. Matt, given the other nut-based cheese and butter products already on grocery shelves, how will your products differ?
You got to try them to know, because the taste profile is unbelievable. And I speak to,
How
whether it
many
be the
different yogurts are there? How many different yogurts are there? I was like
yeah,
this.
look, there's always room in the market for variation. The question is how do you differentiate? And for us, it was always on the taste profile. And so going back to the co-founders and the management team, the whole genesis of the business was to create items that mimic their dairy-based equivalents, because you had people like Afram Pristine, who is a cheese expert. And so he's curated things like our plant-based brie like you would a dairy-based brie. Why? Because he actually manufactured them in France. He knows the production techniques. So, I just speak to the taste profile. And look, you can look on the media and things like the
Yeah,
Veg News.
this is not like some. I think essentially it's almost like artisanal quality cheese. This is not like some corporate thing from Kraft where they're just saying,
No,
hey, it's plant based. It's some.
no,
This is not some
we're
corporate. This is
looking.
actually, these guys are the experts. They've done. I mean, we had your guy. What is it? One of the guys from he was what is it called maître de fromage, right? It's like
Maitre de France, that's
super
Afram. Yeah,
like
the
big thing
cheese
in France.
expert.
Where you gotta like
It's
go to, you gotta like be an apprentice for years to learn the craft of
yeah,
making
yeah.
cheese and butter.
And he's Canada's own, I believe. So, when you talk about expertise, you can't get better than that. So, I just speak to the taste profile. Look, there's room in the market for variation. Jack, you said it. Look, there's tons of nut-based milks. It doesn't mean that there should only be one. Our job is, with our taste profile, is to differentiate ourselves and show the customer how good plant-based products can be, and how they can mimic their dairy-based equivalents for those people who are skeptical. And I think we've proven that point with the SKUs that we've launched so far. And so that's what helps differentiate ourselves in the market.
Okay. So Case, I think what he's asking is, are you still receiving interest from landlords in the U.S.? Because I think you mentioned that you had a bunch of real estate guys in the U.S., I think in New York market, that reached out to you about opening stores in the U.S., organic garage stores.
Yeah,
Which is a
we're
great
always
fit.
having, there's always ongoing conversations, at differing levels of interest and seriousness. I think the great thing that anybody who's watching this program should realize is that even though with our we're not 1,000 stores here in Canada, so the penetration that we do have in the market, we're picking up interest not only across Canada but in international markets like the U.S. market. So we're always willing to have those conversations, whether it be partnerships, licensing deals and things like that. But I think it speaks to the potential of the brand that it translates well to
I'll
any
tell
market.
you, Matt, we've talked about this before. It's kind of like a perfect storm right now. You're in the right place at the right time to expand into the U.S. with the stores, because you have a massive demographic change happening. You have the millennials, you have the Gen Z guy. Was it Gen Z or whichever one? The one after what? But basically, you have this massive
Y, Z, Z,
whatever it is. But there's a
all of
massive
them.
wave that's going to be the biggest. They're going to be the biggest population in the U.S. market. Very short. I mean, they're already. I think they are actually now. But they're all in their 30s, early 30s, many cases, and we're seeing in terms of real estate development, like you see these like kind of like multifamilies, apartment buildings going up, which like these 4 or 5 story buildings with big retail base at the bottom, which can fit like a 5,000, 10,000 square foot store, which is exactly what you're doing. And most importantly, they really want a tenant like you. They want to have an organic garage in there because that's actually a selling point for them, for their tenants. Because millennials are, they're lazy. They want convenience. They want instant gratification. They don't want to get into a car and drive. So they want to go downstairs or whatever. They want to walk 2 blocks and get their organic products.
I think, and I've touched on this before, when it comes to where the market is. Grocery food specifically is extremely hot right now. Why? Because we're coming out of a global pandemic where grocery was an essential service and pandemic proof. And so if you're a landlord looking for tenants in your development, you're looking for businesses that can withstand things like that. And knock on wood, we never go through something like this again. However, it's a landlord's job as a long-term, owner of a building to look out into the future, and they want to protect their investment. And so there's no better tenant right now than a grocery anchor. And then you extend that one step further.
Especially, this is like a hit brand. I mean, you're
Well,
like a hit
you
brand
extend
that,
that to, real estate developers who are looking for something different, which we definitely check mark that box in terms, you saw the way our stores look and feel, and we did a great walkthrough. But then extend that to the industry that we're in, which is the organic and natural space, which is the one of the only sectors that is really growing very rapidly in the grocery sector, given people's pivot towards health and wellness. And so you add up all those three things from a landlord interest level, which is why I said, we announced what we were planning to do in our domestic market, and we were swamped with sites. And then that extended to people picked up on that press release and saw it in international markets, asking what our interest level was there. Why? Because they have landlords and developers that want something different in their building, something that is on trend, and something that is pandemic proof and an essential service. And so we check mark all those boxes. And so for us, the interest level has never been higher, and it gives us great confidence, for the growth prospects that are, in the future.
yeah, and again, I think if you can just, I don't, and you mentioned there's multiple ways of expanding in the U.S. internationally, whether it's, your own stores, you could license, partner. There's multiple ways of doing it,
Yep.
franchise, whatever it is. But I think once there's a first organic garage in the U.S. market, that would be a game changer for the stock.
Yeah, we'll always look. We're always evaluating opportunities and what we feel is best for the brand, in the
Even
long
Vancouver,
term.
Vancouver also. I mean, for Canada,
Absolutely,
because
West Coast Canada, yeah, it's definitely a viable market. And for us, it's evaluating those opportunities and figuring out, what makes the most sense short term and long term. And all I can say is there's always conversations going on that side of the business, and definitely on the CPG side of the business. And so, I'm excited because, like I said, I get to see behind the curtain. And all I can say is, it makes me very excited for what we have coming down the pipe.
okay. Somebody was there? Did you announce a copacker previously? Like I think back in April, maybe.
Yeah, we did. And once again, we have ongoing conversations with them, in terms of, what they're able to produce for us and what that means for our long-term growth. And so they're definitely in the repertoire of co-packers that we continue to discuss, and talk with. But it doesn't limit us into, further discussions. And so, with our focus on the US market, there's certain limitations, in terms of what a manufacturer can produce and export, internationally. And so we just want to make sure that, understanding now the interest in the US market from the overwhelming response we got as our SKUs launched and got picked up by media, we understand that the US market is something we want to heavily focus on. And so there's some limitations with Canadian, domestic co-packers who wouldn't be able to necessarily export internationally. So that limits us a little bit. But definitely in the repertoire, with that, those conversations have not stopped.
Okay. No, really. So there's two massive opportunities and two massive, catalysts here between the, the expansion of the plant-based line, the CPG line, to, more SKUs, more doors. So that's a path to $250 million valuation right there, based just on 15 million of revenues run rate this year. I think that could happen. And of course, if you do, you announce 4 to 6 new stores, organic garage, that's another, 250 to 250, maybe even 300 million value. So really, there's multiple paths to get to a $500 million valuation, which is a 25x from here. So that's almost $10.
Yeah, and look, that's why I'm on here today, because want to keep people, that are following our story or new to our story, informed with, what the potential there is. And all I can say is, behind the scenes, we're working very hard to reach those milestones that we've discussed. And I'm very confident, in our ability to execute on those, and what that will mean for, definitely the company itself, but obviously, what that, will be interpreted in the public markets, and the potential that there is there in unlocking, what we feel is the true value in our stock price. So it's very exciting. There's a lot going on behind the scenes that is very exciting. That I expect to have some good news coming up in the near future.
Okay, excellent. Matt, on that note, I want to thank you, and we look forward to hearing more good news in the coming weeks. Thank you, everybody, for joining the program today.